Hey, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com, your one stop shop for all things trading. And I'm coming to you live today from our live trading room. And if you want to join me, a big group of traders at all different levels, I jump on the mic every afternoon, do a little bit of trader training. We look at markets. I take chart requests. If you want to do all that and see what I'm trading throughout the day with my entry price, stop price, target price, and reasons for the trade, go over here to drstocks.com, click the subscribe menu, and scroll down and hit live trading room. And for a discount, you can add on our brand new live options room if you want to do that too. All right, let's get started by getting over to some charts, and I'm going to put the S&P chart up here. You can see this is the potential new downtrend which the market is carving out, and it may simply be a bull flag off the long rally we've had since the October 23 bottom. Pretty much all up. We had a short little bit of a pullback in April. We had a little bit of a pullback in October, but really very minimal sell offs, only lasting several days. The April one is a little more prolonged. But now we went all the way up in early December to new all time highs, and we're in pullback mode ever since. The market has had a couple of big slams. One was the Fed day back in December 18th, when he disappointed by becoming more hawkish. We went from 3 rate cuts to 2 rate cuts, and the market didn't like that. A few days later, everybody was hoping that NVIDIA at the big CES conference, where they unfold all this new tech, that NVIDIA was going to save the market, and it did not. It was a gap and crap kind of day, and we've just been underneath those highs ever since. We're starting to build a new downtrend, which is not good news for the bulls, but it is not a surprise at all. I've been saying since really early December, mid December, that quarter one, at least, maybe quarter two, are going to be fairly soft. Several reasons for that, but I'll go over those in just a minute. So, tomorrow morning, Friday, the January 17th, I will be on IBD Live as a panelist. I'll be talking about some stocks there and some general views on the market. I wanted to share with you some of the things that I'll be talking about here in anticipation or practice. I'm practicing what I'm going to be talking about there tomorrow. And if you're interested in watching me, if you're not an IBD Live subscriber, you go to the investors.com, click on the IBD Live link. It'll cost you about $10. You'll get a 3-month subscription. You can cancel at any time. It's a very good resource. And I'm really looking forward to sharing tomorrow what I'm looking at. So I've got a couple of stocks and I'm going to tease. One stock can be summed up in one word, and that is chickens. Chickens. Yeah, you heard that right. So, if you've ever seen the movie The Graduate, right? The old guy talks to Benjamin, and he said, "Benjamin, I just have one word for you. One word: plastics." Well, of course, if Benjamin had invested in plastics back then in the '60s, he would be very wealthy today. I'm not sure that's the kind of trade we're talking about here, but I will talk about a trade involving chickens, and which also is latching on to the whole keto carnivore diet craze. It's been sweeping through the world, really. I'm on it myself and can testify to the effectiveness of it. So we'll talk about that. I also have another trade I'm going to tease here, and it has to do with dirty laundry. Yeah, dirty laundry. All right. So let's take a look at some of the reasons why I think the quarter one is going to be a little bit soft. Number one, the market, and it's no secret here, has been led higher by the big blue chip tech stocks at the very top of both indexes, the Nasdaq 100, the S&P 500. In fact, if you look at the top 5 by market cap stocks in the S&P 500, they now make up 30%, almost 30, 28.9% of the entire index, because it's a weighted index and they've gotten so big. That is the highest ever in history. We've never had a top 5 set of stocks anywhere near anywhere near 30%. You have to go way back into the 1960s to find any figure that's even close to that. So that is unsustainable, and it has become a kind of a bubble. So that's one of the reasons, and we're seeing also this manifest itself in some rather bearish readings on breadth, market breadth. How many stocks across the whole spectrum of the S&P 500 or the Nasdaq 100 are actually participating in the upward movement of the stock of those indexes? Well, it's not that great. It's a much smaller percentage than it should be. Let me show you one. Let me pull this over, and I'm going to show you one chart that I'll be sharing on the show tomorrow. So this is a chart. We have the S&P 500 at the top. The red arrows mark all-time highs, and the indicator down below is the percentage of stocks in the S&P that are trading above their 200, not the 20, the 200 moving average. And typically, when we're at all-time highs, or when we're moving up into all-time highs, or we're getting a new all-time high almost every other day, you see most of the stocks, right? 80%, 90%, 95%, most of the stocks of the S&P right up there moving higher and holding those highs above the 200. Well, when we get some bearish divergence in that indicator, i.e., a new all-time price high, but a lower high or even a falling downtrend in stocks trading over the 200, it does tend to mark, not always, but it does tend to mark a near-term market top preceding a pretty substantial pullback, if not a full-blown correction, right? Now, it doesn't always happen. Back here in 2005 or so, we had a market top, we had the bearish divergence, and the stock market just kept going higher. But it preceded the 2008 crash. It preceded the 2015 bear market. It preceded the 2018 bear market, preceded the 2022 bear market. And I don't think we're heading into a bear market, but I do think we have a very good chance here, now that we're seeing this bearish divergence, pretty good chance of seeing the market pull back substantially. At 10% is kind of my marker for quarter one, and then we'll have to deal with quarter two after that. If the S&P is at 6,000, that would put us down to about 5,400. And not a huge haircut, but it's enough to make you feel it. So we have to be careful with that. So that's one problem. The other problem is that the mags are in a bubble, and it is the biggest bubble we have ever seen in recorded market history. And every other bubble, every time, has blown apart at some point. Doesn't mean it's going to happen today. Doesn't mean it's going to happen even in 2025. But it does mean that now that we're at historic expansion of this small set of stocks, right? And that's kind of the definition of a bubble. A small group, a small sector of the economy just gets blown up out of proportion. And everybody loves it too much. Everybody crowds in, sells everything else, crowds into that small space. And as I often say, when everybody has bought, there's no one left to buy, and the market can only go down. So, Mag 7, biggest bubble in history. We've seen previous bubbles before. Oil, the tech stocks of the dot-com era of 90s, the Japanese trade in the 80s, very, very excellent, right? Very good. Gold in the inflation years of the 70s, the Nifty 50 in the 60s. We've seen these bubbles before. They've all broken. It's only a matter of time before this happens to the Mag 7. All right, so that's another thing I want to mention. And we're also seeing some cracks, right, in this amazing set of stocks, biggest companies on the planet, owning everything, buying everything. They are setting the pace of the market for sure. But we're always starting to see some of these guys come off their highs. So Apple, Nvidia, Microsoft, Tesla, Netflix, they're all, at one point at least, they bounced back a bit yesterday, but at one point they were at 10% already in a correction mode off their 52-week highs. Here's the thing about Apple. One of the reasons why it's not doing very well at all, one of the weakest of the big seven, is that 60% of its sales are overseas, and the dollar has just been skyrocketing. The dollar shot up 10% in the last couple of months. Not too many people talking about that, but that is a major factor in keeping a lid on the big stocks that are conglomerates that do a lot of business overseas, especially with China. And that's a problem, right? The Chinese yuan is crashing, the dollar is rising, and Chinese, they just can't afford our stuff anymore. They can't buy iPhones for what money they're making. So big problem for Apple especially, but we're going to see this trickle down into others. Nvidia's starting to face a lot of headwinds now that we never saw before. Just a few weeks ago, everything was beautiful. Then Jensen had his trip up at the CES conference. A couple of days later, I think, or maybe a day later, President Biden came out and said that they were going to start regulating the chip industry and Nvidia in particular. And the Jensen flashed off this scathing letter directly to the White House that called this Biden's regulatory morass, among other things that it said. Their Blackwell chip was famously overheating in a lot of settings. They've had to scale back some of their earnings estimates. That's never a good thing, ever a good thing. I mean, it's conservative management. That's a good thing, but it's going to hurt the stock near term. And some of the big companies that buy chips from them are starting to delay their orders because they're a little worried about the quality of these chips. So that's a problem, right? We've got antitrust suits coming against Google, Facebook, Amazon. There's an SEC investigation, although it's been on and off, against Tesla. It seems to be back on again. And this is a concern I haven't heard anybody talk about, but Microsoft is now moving in billions of dollars worth of building equipment into India. Amazon doing the same thing in Mexico. And Trump is going to come along and say, you know what, guys, I really don't want our American businesses going abroad. I want to bring them back, right? That was his thing in the first term, repatriation of all that American money. So is that going to be a problem for Microsoft and Amazon? I'm sure they'll work something out, but it may be a problem. Yeah. All right. So we already saw that the mags are a big bubble. Here's some good news. And this is actually really good news, at least for some parts of the market. At the same time that all the stuff is going on with the big mags, we just had earlier this week a reading from the Small Business Confidence Index that it has shot way up. It's actually been going up steadily the last few weeks, but it just shot way up. And I think that is largely on the election. So small businesses, small cap stocks, growth stocks, stocks that are IPOs, right? These are the guys that are really getting excited about the new administration with a lower tax bracket, lower regulation, and lower production costs, which should happen if we can get oil coming down, right? We're going to drill, baby, drill. We get oil coming down, energy costs coming down. We get, cut out all the red tape. And so you don't have to wait for weeks and weeks to build your new factory. And if we can get commodity costs to come down and labor costs, I don't know about labor costs, but because that's going to be a problem with the deportations. But we're going to see some changes that should be good for certain sectors of the market. That will be good for us as traders because we can find those guys and we can ride their waves higher. We also saw a whole bunch of new, on the day the market was falling on the Nvidia crack, there was like 40 or 50 stocks in the big board exchange that had bullish crossovers of their 8 EMA over their 21 SMA. And that's a good sign, right? We're starting to see some upticks in stocks that are a bit under the radar. And as I just showed you, the highest stocks, we went from 8% stocks under the 20 period moving average in the S&P 500 to 65%, something like that, in just several days, right? Just a couple of weeks. That's a massive run up, and that's very bullish, especially when it's happening against an index that's falling. Right? If the indexes are falling, but we're seeing more components of the S&P 500 getting stronger, what does that spell? That spells rotation. Okay, so that's That's thesis number one. Thesis number two: China is a problem and could be a huge problem, especially for the big blue chip tech stocks, right? So you've over in China, you've got falling asset prices, you've got crashing interest rates, you've got real estate values down over 80%. You can imagine that. You've got a GDP falling so fast that Mexico now has a higher GDP than China per capita. Let me show you the crashing real estate prices here. Oh, that's the chart I was going to show. That one right there, which we looked at already. Look at this. May of 2021, 82% now lower real estate prices. Why is that happening? Well, there are several reasons. One is the one child policy, not enough people, not enough population. But they also went on this building boom, just just building, creating new cities where there weren't cities before, and there just aren't enough people. I don't know why they did that. Doesn't seem very smart, but they did, and now they have a falling asset price. Okay, so China could be a real problem. Could go into recession if they're not in one already. Could go into depression, which would be horrible. That'd be kind of a black swan event. They are the world's number two economy. They're our biggest trading partner outside of Europe. And yeah, that would just not be very good at all. Oh, and their debt. Their debt is going way, way up. Now take a look at this. Their the debt ratio of debt to GDP is now higher than our own. We keep talking about how ours is bad, right? Because the government has been spending, and that is a bad thing, and it should start to taper off under the new administration. But our GDP is also doing really well. So if you can expand your income and your outflow is also going up, it kind of is a wash, right? So that's kind of where we're at. But China is not having that at all. Their GDP is shrinking and their debt is going higher, and they're trying to stimulate their economy, and I'm afraid that that trend is probably not going to fall off anytime real soon. So that's a problem waiting to happen. So that's also part of the thesis that quarter one, maybe quarter two as well, is going to have some trouble. We also saw this in Japan. You know, in the 1990s, they call that the lost decade of Japan. The market was down. After a roaring bull market in the 80s, their market fell 75% in the 90s, caused a lot of bankruptcies and debt and a horrible, horrible crimp in their economy and a lot of unemployment. Just really, really bad decade. It all started with crashing rates and a housing bubble burst the same way we're seeing now in China. So that is a problem. We don't want a black swan event. One of the concerns that I've had, one of the concerns that others who know this territory much better than me is is uh, uh, is an invasion of Taiwan. You know, if China is having such trouble, one of the things they may do out of desperation is try to take over the next door neighbor, which has a much better economy. I hope that doesn't happen. I really don't see it happening in the Trump era. If it hasn't happened in the Biden era, I really don't think it's going to happen in the Trump era. But there are those who suggest that could happen if Z gets desperate. So let's just put that aside and hope and pray that that never happens. So here's some good news. We just peaked on the asset active investment manager index. So the NAAIM, which stands for National Association of Active Investors, Active Investment Managers Index, measures how much are they exposed to stocks, and how much is in some other stuff, right? Bonds, cash, commodities. Well, we hit 99%, which is not too unusual. You can see that this blue line here, which measures that index, gets up there pretty close to 100, pretty frequently. But we hit that just in December, and it was a peak. Everybody started taking money out. We're down to about 60% right now. This was last weekend. We're down a little bit lower than that now. And that is good news, because every time we got down in that area, like underneath 60%, we saw a nice prolonged market rally. over months, right? We were there 4 times since the October low in this current bull market, and we're down there again. Each time we got down to that level, we saw the market rise up. Why is that? Because everybody's gotten out of the market that wanted to get out. And if you've already sold, there's nobody left to sell. The market can only go up. So that's a potential good news. I do think, however, we still have a little more downside. We could see that number fall below some of these other lows by the time we get out to where we get some equilibrium in the market. Maybe we're down, 10%. That's my guess. 10% off the highs, 5,400 in the S&P. So let's see. We'll just watch this, but at least that's a little bit of a hopeful sign. And the other thing I want to talk about. So our GDP too has been falling. It was 4.4% in 2023. It's 3% last year. When GDP comes down, yeah, it does make the debt not so good, but it also causes interest rates to fall. Now, we haven't seen that yet. We haven't seen interest rates fall. They're still up, right? 10-year yield is up near 5%, but it should start to come down. It should start to have a trickle-down effect. That's another good thing. Another good sign is the dollar seems to be topping out. And if you were to look at a daily chart of the dollar index, you're going to see that it's getting very close to a supporting trend line. If that breaks, I think we're going to see the dollar crack. We're going to see gold go up, Bitcoin go up, and you're going to see a lot of the small caps benefit from that. And lastly, and we have to say this, and everybody says it all the time, that the U.S. stocks pretty much the only game in town. Europe is in a recession. China's in a recession. They just won't admit it yet. And the BRIC countries, they're not as strong as they used to be. Let me show you this. Where is it? There it is. 2024. This is only quarter four of 2024, right? When we were hitting all-time highs. If you measure the size of the market by market cap, which is a function of a variety of things, right? But it's a pretty organic way of looking at the health of a market. When market cap is expanding, you're seeing acquisitions, you're seeing new IPOs coming online, you're seeing share offerings, you're seeing growth in earnings, of course, and everything else. We were the only country that grew in quarter four on a GDP, on a market cap basis. Every other country, including all the European countries, including developed nations, and including some of the BRIC countries, they all were really, really down there. And South Korea, Denmark, Brazil, really, really down there in quarter four, really took a hit. All right, so we're the only game in town. We're the only place where you're going to find alpha. We're the only place where you're going to find real organic growth. And I don't think that trend is going to go away. So I do think that we're in a very good position with respect to that. All right, let me look at some charts. So I'm going to show you the two stocks that I'm teasing here, and we'll jump over to these, and then we'll look at indexes, and then I will take some chart requests. So I'm going to tease two stocks tomorrow. One is this stock from the IBD Top 50 list, and I put this on my list of stocks to talk about on the weekend, and it has rallied quite nicely since then, right? So this was Friday of last week, I believe. 1, 2, 3, 4. Yeah, this is Friday of last week. It closed right around 40, and now it's almost 10% higher, but it's still in very good shape. You can see we're still under the 52-week highs, and the pattern that's developing here is I would call it a base breakout, right? A bullish base breakout. We had the high established, the low established, the high established, and then a little handle here that broke out very nicely, very strongly on huge volume on Monday. And now we're heading higher. This is VITL. Vital Farms, I think, is the company name. Yeah, Vital Farms. It is a small cap. It's under $2 billion of market cap. And here's what they do. I'm going to call it an ag disruptor play. They focus on chickens. and they focus specifically on the eggs of chickens. They do free range, they do cage free, they do antibiotic free. Uh, they're very healthy and very happy chickens, very healthy and very good eggs for you. We've got two things going on. So we've got a complete distrust in big ag farm companies that are, the Monsantos of the world that are destroying our food, depleting the soil, putting all kinds of stuff in our foods that are not good for us. There is a massive shift in American awareness, especially toward Europe is ahead of us on this, by the way. But in American mindset, moving away from processed food and moving much more toward organic, natural food, and especially in the agricultural and the live um, produce field, you've got concern about all kinds of bad stuff going into the animals, and then it gets put into the food. And here we have a company that's completely committed to something very natural. That's number one. Number two, you've got this craze going on, and it's becoming more and more widespread. And that is, people are moving away from carbs and processed foods and grains and cereals and stuff, and moving more toward low carb, meat centric eating. That I'm on that diet. I've been on it for several years now. After 7 years as a vegan, which almost destroyed my health, almost lost a kidney, lost several teeth, had all kinds of problems. And then I found keto and paleo, and then I'm on the carnivore diet now for the most part, not super strict, and with total turnaround in health, absolute turnaround in health. So I'm convinced that it works. A lot of folks are jumping on that bandwagon, and their growth here is very, very good. Let me get my notes back up here. 140% year on year growth in earnings, and 1,000% growth in 2023. That's when things really started to pick up. And here's their business model, which is really interesting. So it's kind of like a co-op of farmers around the country that adopt the branding and the culture and ethos of Vital Farms. They come under the Vital Farms umbrella. They get all kinds of goodies from Vital Farms in terms of marketing and branding and production, and they can really scale up. So with these little family farms are coming under Vital Farms umbrella. They become like a Vital Farms affiliate, and then they get to sell Vital Farms eggs. They have to raise them themselves, but they're selling them as Vital Farms, which is huge win for them, and a very good win for us because now they're scaling up their production and prices are being kept fairly low. So I love the business model, love the eggs. We eat them all the time. And I really think this is a good win going forward. Um, the other one I want to talk about is dirty laundry. So every morning I walk my dog. We walk down like a path, and on either side are homes behind some bushes and stuff. It's a nice path, nature oriented. And as I've been doing this over the last few months, I've been smelling in the air. What do you call it? The scent beads, right? People are using more and more. They're using these scent beads, and I've been hearing the advertising for these scent beads on Spotify radio. I see them. My son and I, we watch NFL highlights all the time because we're missing the games every week, and so we watch the highlights and the little commercials they put in between the segments are scent beads. So you've got scent beads everywhere, right? And you can smell them everywhere. And I tell you what, I think that when you wash your clothes with these scent beads and you smell them, it makes you happy. I'm sure they put some sort of weird chemical in there that triggers the dopamine in your brain because it just makes you happy to wear these clothes that are smelling so nice. So I have a feeling these scent beads are just flying off the shelves because I'm smelling it all over town, all over town. And it's like people are washing their clothes 24/7 because they like it to smell so good. So who makes the scent beads? Well, they're sold by Tide and Gain and several other companies, but who owns all those guys? Procter and Gamble. Yeah, good old Procter and Gamble. They've been around for I don't know 150 years, something like that. So PG is not a growth play. It's not a fancy tech play. It's not even a very good looking chart. But I do think that, and this is not a play until after earnings. I think earnings are going to have to confirm my thesis first. Earnings are coming up. They are the 22nd of next week, and if they blow it out of the park, I think Procter and Gamble is a good place to park some cash in 2025. What another thing I do like about it is that if you go to the weekly chart, it looks much better than the daily. So the weekly chart, you've got a nice uptrend. It's been in place since the bottom of the 2022 bear market, and it was a relatively good safe haven during that time. And it's been choppy, right, up and down, but it is certainly in an uptrend. And we're at the bottom of the trend right now. If you were to put a trend line underneath those pivot lows, you'll see that's pretty much where we're at. And we're holding above the 200 weekly. We've got bullish divergence. And I do think that it's going to be a very good win on earnings because of cent beads. So I don't know if that's going to play out, but it is. I just have to say that I've been seeing these guys all over town. I should say, smelling them, not hearing them, not seeing them. Anyway, so that's tease number two. So let's look at some other charts, and we'll put all that information aside. We kind of ran through most of what I wanted to talk about. A few of the charts, we'll just look at these quickly. Some stocks that I do like. We were already in PSTG. We took profits on this one, but I think there's still some good upside here. This is a it is a play on data centers and the storage capacity of data centers. It's not the only play in that space, but it is the fastest growing one. It's got the best IBD metrics, and you're going to see really strong accelerating earnings growth over time. It's forming a nice looking cup and handle. So there's your pattern. You've got a nice rounded bottom right there, and here's your shallow handle. That's exactly what you want to see. You want to see a nice tight handle, right? Big cup, tight handle. That's the pattern. We're breaking out today. I mean, today might in fact be the day that we should have gotten in. We sold it, I think, pretty much where it is right now. Pretty sure we got out of it earlier today, or maybe it was a little bit lower. Yeah, it was close to the open anyway. So that's PSTG. I like it. I do like also HubSpot. This was an IBD stock of the week or stock of the day last week. It's nice strong uptrend, soft pullback into the rising 50 period moving average, a little bit of a rounded bottom here. And it didn't look very good yesterday, which was a concern because I thought, everything's going up yesterday, and it wasn't. So that's a problem. But there were actually a lot of stocks that did gap and crap yesterday. So a lot of stuff did close off the highs of the day, but it's right back up there today in a fairly weak market tape. That's a good sign. Yeah, I think Hubs is ready to go. 800 seems like a lock, and that would be a very nice move. Very nice move. Maybe some calls on that would be nice. Fortinet is your best of breed in the cybersecurity space. I've been kind of waiting for this to get interesting. It's done some big red sticks, which is not so good, but this high tight base right there is tight and getting tighter, and we're down at the bottom of it, which is typically a pretty good place to get on board. So watch Fortinet as a recovery play or as a good run into earnings. Let me look at a couple more. HWM, I really like this play a lot. This is a commodity play. They make an aluminum alloy metal that is stronger than steel but lighter than aluminum. Let me say that again. Stronger than steel but lighter than aluminum. And they have a patent on it. They're the only ones that make it, and they're selling it to 90% of the military planes that are out there right now. Military just came out with a new fighter jet, an F-35, I think it's called. What is the name of that guy? Strike Fighter. The Strike Fighter. And it's this crazy plane that can land. It can, where's my hand? It can take off from a warship vertically, like a helicopter, and then it can slowly turn horizontal and take off at the speed of sound. And when it lands, it comes in and it does like it turns over vertically, and it just can hover. It can hover in this. It's just crazy because it's so light. It can do all these amazing things. So the metal of that is made by this Howmet, Howmet Aerospace. They've also spun off that application to different things. So they're making wheels for big semi trucks, and the wheels save like 20% on fuel costs over time because they're reducing weight so much. So all kinds of good stuff with Howmet. It's got a very good story and it's a very strong chart. Strong uptrend, breaking out to all-time highs this week. And earnings are coming up. I'm not so sure I would buy them ahead of earnings, but I do really like this play for a longer term hold. It's investment grade. And lastly would be Coin, which is pulling back off the highs, came back in with Bitcoin, but you've got so many tailwinds here. So the Trump administration is promising on day one to come out with some executive orders that are pro crypto, pro digital coin, and that's going to drive a lot of interest. You've got more and more ways to trade Bitcoin. That increases the retail interest in trading Bitcoin, and Coin is your premier exchange for trading Bitcoin. So anything that draws attention to Bitcoin, anything that deregulates Bitcoin is a big win for Coin. I think this is a good Trump trade. It also has some pretty good metrics in IBD. It's like a 95 or 96 comp rating. It's got some very good growth, and we're looking at here at a double bottom, just about ready to break out. It's going to have a little trouble probably at the 50 and at the former pivot line in between, but this to me looks like it's a good move out of the pink zone. It might flatten out for a few days and then rally back up to hit 350, 360. If you look at the big weekly chart, you're going to see this pattern right there. Big, wide from day one, big, wide inverted head and shoulders. We've already broken out and we've come back to retest the neckline, and we're bouncing cleanly off that neckline. All we have to do is get above the pullback line, the 50, and the midline of the LRC, and it should be off to the races. This pattern, by the way, measures all the way up to about 450, way up there, way up there. It's only at 283 right now, so I do like this. It's a big green stick. I'm not so sure I'd buy a big green stick on a day like today, but actually, no, it's a big weekly stick. Today is not all that big, so yeah. All right. Now I'm going to take some chart requests. I'm going to put let me put my sheet away so I can see what you're saying. All right, you've got a few on there. Let's take a look. CRDO. All right, so this is this reminds me of several other charts. Google is a little bit like this. Trying to think of the other tech stock that I like. Well, PSTG is a little bit like this, but there are several others that have done a power gap up and then a high tight base right across the board. Wait a minute, it's going to drive me crazy if I don't think of this. I have it in my notes somewhere. Yeah, it's PSTG, similar pattern. Power gap up and then a sideways base. It's up at the top of the base, and usually when it's up there at the top, it means it's ready for a new leg higher. I like this. I like the very bullish, right? Very bullish setup. There's nothing bearish here. And your target would be up here in the blue zone. It's probably not going to go up there in a straight line. It's probably not going to go vertical, but and I'm not so sure. I don't know. I don't know the company, so I'm not sure I would hold it over earnings. But I would say between now and earnings, you're maybe looking at getting up around 92, the low 90s from 77. That would be a nice trade. That would be a very nice trade. Let's see. Well, let's look at Marvel. No, Marvel. Marvel. There we go. All right. It's also very similar. They must be all in the same space. So it's a power gap up. We did come back and test some of that gap. The 21 held nicely, held nicely, bouncing off. It's been a little bit on the I'm not going to say weak. It's not a weak chart at all, but it's not exactly robust moving up, right? From open to close. We're getting some gap and crap kind of stuff going on here. But yeah, this looks good. I would say it's not necessarily a buy. You probably can find a better risk to reward ratios out there, but it is a good hold if you're already long. It looks to me like it wants to get back up, and that's your line right there that it's going to try to get across. It didn't get there today. Of course, the market's not really helping much today, but it does look like it wants to break out of that eventually and then get up here to the blue zone around 130. I'll take a look at CRM because I'm in that early excitement. It did look very good earlier. It was a big green stick right up here near the highs of yesterday. And once again, not really doing a whole lot of anything. So I'm in a diagonal debit spread with this. It is making some money, but not a whole lot. It kind of gets just above my strike price, and then it comes back down, and I have to buy them back at a not at a loss, but at a small profit. Not really doing a whole lot for me. I'm probably not going to hold it another week. Um, yeah, I don't know. If we're looking ahead at fourth quarter, sorry, a week first quarter, this one may capitulate with that as well because it is a big blue chip tech stock. It is the best of breed in that space. Maybe just too much competition coming in from smaller plays. I don't know. I don't know what's wrong with that one. Tesla. Yeah. So inside day bar, not a bullish one, but I do have to say that this. I think we can be bullish in general on Tesla into the first quarter, in part because Musk has some political tailwinds right now. In part because it is the only EV car that is making money and that is in high demand. And in part because there's still a lot that has to roll out, right? You've got Optimus, you've got automatic driving technology, you've got a solar wing, you've got all kinds of stuff that hasn't really contributed yet to the bottom line that potentially could be huge. So I do think Tesla will always have a bid of some kind until it just goes bankrupt, which I don't think it ever will. Um, but on a short term basis, I wouldn't buy it right here. It yeah it looks to me like it's ready to come back down and test the 50 again. So it's probably going to be in the below 400 this time next week. That's best guess right there. Okay, you're typing in too many, guys. Hold on. All right, let's take a look at Spotify. I did see something very good about this. People were talking in my pro group about call flow. Yeah, to me, this looks like it's there's the bottom that held around 445. Now it's moving out of the pullback trend, looking maybe a little bit toppy, but yesterday's upside was huge. I think that's probably what they were talking about. A lot of call flow coming in, probably a lot of day traders. They're probably out already, took the profits this morning. So that is not really that material, but um, I suspect the next move will be a little bit of a rollover, fill that little gap, come down and test the 21 again, and then back up higher. But probably by the time we get out to late February, it'll be up here in the let's say the low 500s. Right? So it does look to me like it's not a buy today for sure. If you're already long, hold and trail up your stop, but I wouldn't buy it today. By UTS, do you mean this utilities ETF, or do you mean like XLU? I'm not sure, but we'll go with XLU. So this is one of the several sectors that should really benefit from falling rates, which we're seeing a little bit of today. Would really love to see the 10-year yield get down below 4.6. Otherwise, I think it's going to probably bounce back and hit 5 again. But with falling rates, with falling inflation, with the Fed becoming a little bit more dovish, which I think they should, because I think we're still not out of the woods with recession. Um, and with commodity prices coming down, you should see utilities catch a nice bid. They caught a really nice bid during the whole expansion and all the hope and hype of the AI craze, and then they came way back down on reality. But they hit the 200, they bounced back. Big green stick today. It's not a buy. Don't buy big green sticks, please. That's my big green stick rule. Not that it can't go higher, but more likely it tends to give you a better price over the next couple of days. But this does look to me like it wants to get back up into the low 80s. And of course, you would play that with Utsil, right, to leverage that move. So here's Utsil around 35, may come down to about 34, 34.50 in the next day or two, and then bounce back up to 40. That's the path of least resistance. Walmart is, of course, good, good, good. It has come back to the 50, tested it today, back up to the 21 period moving average. It's green on a red day. That's all good. This is a nice looking trend. The trend is beautiful, right? You've got the 21 above the 50, 50 above the 200, uptrending LRC, nice and stable. And it pulled back. There's your A, B, C pullback. And now I think it's starting to move higher in the resumption of the trend. There will be, of course, some resistance right about that level, 90, 95, 96, and it's at 91.50. So not really a whole lot of upside here, but you could leverage that with some calls. And frankly, I wouldn't mind anyone holding Walmart all through 2025. I think it could be one of the very good places, one of the good stable places, I should say, for some outperformance. I don't know if you're going to get 20%, but 12, 15, 16% plus the dividend, that's not, you can't sneeze at that. Okay, Boyle, way up. Don't buy it today. If you're long already, move up your stop. Start to take some profits off the table. It can be a heartbreaker, and I speak from experience. We used to trade Boyle and Cold quite a bit. I don't know what went wrong, but for whatever reason, I started to get some bad reads on both of them, as well as the whole energy sector. And we haven't really had a really good trade anyway since then. So I haven't been focused on them at all. It can be the kind of thing that you get a breakout one day and then it's down 10, 12% the next. Breakout down 25% over the next couple of days. And that's not the kind of thing I like to trade. But I have to say, if you're long, hold it, rise up your stops, take profits off the table, even if you're just down to a handful of shares, and enjoy the ride, because that could come. It is up at 80 right now. It could be 65 tomorrow. So just be careful. Just be careful with that. It's definitely not a buy today for sure. Home Depot, I like Home Depot. So we were in a call spread. I got us out a little bit too early this morning, but we took a nice profit. This is over in the options room. And this looks to me like that. I really thought it was going to reverse back lower as the market was starting to fall off. And it didn't. It's right back up now to highs of the day. This is good. It's going to get up to 430, maybe not anytime real soon, but and it will benefit from rebuilding California. It will benefit from falling rates. It will benefit from falling mortgage rates if we ever get them, and lower fuel costs, all kinds of good stuff. It may get hurt, however, by new immigration policies, and I don't know. I don't know if California will allow for. I just don't know how that's going to go. How that's going to go down. I don't think it's like the home builders can come right in and start rebuilding new homes. California, you've got to fill out 20 files in triplicate before you can even sneeze in the direction of your empty lot. So we lived in I grew up in California, so I know it very well. So there may be some headwinds, some political headwinds in California specifically, but I do think Home Depot is a good play. I like it. I like it a lot. VST. So we're long VST already in the room. It's a hold. It's in breakout mode today. It is best of breed. What is it? They make the infrastructure for the AI data centers, something like that. They make the electronic parts. It's excellent. Um, yeah, I think it's investment grade. That may not last because you're going to get a lot of competition moving into those same spaces, and they're going to start undercutting the price. But until that happens, it's a very good buy. I like this breakout. It's on good volume balance, and your target is going to be the blue zone. If it gets up into the blue zone, I don't think I'd hold it. We're in a premium income play with this one, so we'll just roll it over to the next week and just take it 1 week at a time. But it's been a very good moneymaker for us, and I don't really want to get out of it, but I don't have to. NBIS. So this is the IPO we've been looking at. It's right up there to IPO highs, which is right where Bill O'Neill likes to buy IPOs. I prefer to buy them on the pullback. He likes to buy them on the breakout, but it's a good setup. It's. I know a lot of folks in our pro trader group are into this one, so I can certainly recommend it on their recommendation. These are guys that trade for a living. Um, I don't have any myself. I'm not really sure I want to, but I can't say anything bad about this chart. It's very very good, very bullish. Yeah, so it's really actually it's set up here technically for a new buy at 37.58. You would put your stop underneath. I would put it underneath. What is that? Tuesday's low. I would put it underneath Tuesday's low, and then raise it up. If you go up $1, raise your stop up $1, and keep raising stops until you get stopped out. All right, that's all we've got. Guys, I'm going to let you go. Have a great rest of the afternoon. I'll be back in the main room in just a little bit. Bye for now, and God bless.